cold open. Most people think managing capital is about action. They think you survive 40 years on Wall Street by reacting to every headline, every tick on the tape, every shift in the wind. They are wrong. Action feels productive, but action is usually just anxiety wearing a suit. The rarest skill in finance isn't finding something to do. It's the ability to sit quietly in a room and do nothing at all until the moment truly demands it. Inaction isn't laziness. Inaction is supreme control. Philosophical intro throughout my career, I watched brilliant young minds ruin themselves trying to look busy. They confused movement with progress. They believed that if they weren't trading, rebalancing, or making noise, they weren't earning their fee. That is the distinction most people miss. Activity is not productivity. In life and in capital, activity often generates friction, costs, and regret. Inaction, when backed by clarity, generates patience, calm, and compounding. Today, I want to talk about 5 individuals who understood this truth far better than the crowd. We will look at a pioneer who built an empire on passive persistence, an investor who ran a simple operation out of a single filing cabinet, a manager who knew when to buy and hold what he understood, a thinker who turned sitting on cash into a competitive weapon, and finally, a legend whose entire life is a testament to the power of staying still. Let's begin with a man who proved that doing less usually yields more. Segment 5. John Bogle. John Bogle built an institution on a premise that sounded like heresy to the financial industry. Stop trying to beat the market and stop trading. He championed the simple idea of buying the entire market and holding it forever. He recognized that Wall Street was built on fees, friction, and constant motion. The system rewarded those who traded, not those who waited. Bogle challenged that system by advocating for restraint. He understood that every move a person makes creates cost, and over decades, those costs eat away at the foundation of wealth. During my 40 years managing capital, I saw how hard it was for people to practice restraint. When market volatility hit, the instinct was always to run, to adjust, to do something. But the hardest choice, and usually the wisest one, was to stay seated. Bogle's public framework was built on this exact discipline. He showed that by eliminating unnecessary action, individuals kept more of what was rightfully theirs. Restraint is not a lack of vision. Restraint is the conscious decision to let time do the heavy lifting for you. Segment Test 4. Walter Schloss. Walter Schloss ran an investment partnership for decades without a massive research team, complex algorithms, or high-speed data terminals. He worked out of a small office, relying on simple paper records, financial reports, and basic valuation balance sheets. He didn't trade based on daily news cycles or economic forecasts. His methodology was deliberate, methodical, and stripped of unnecessary noise. He bought unloved businesses below their assets and waited patiently for value to be realized. I spent decades watching people buy expensive software, hire fleets of analysts, and stress over quarterly estimates. They added layers of complexity thinking it granted them security. In reality, complexity just obscures the truth. Schloss's public record serves as a stark reminder that a clear, simple approach, executed without frantic activity, can quiet the chaos of life and capital. True power lies in stripping away the excess until only the essential remains. Segment 3. Peter Lynch. Peter Lynch managed one of the most successful funds in history, but his core advice was surprisingly grounded. Buy what you understand, and hold it as long as the story remains intact. While the public saw him as an active manager, his underlying philosophy emphasized long-term ownership over fast trading. He believed that constant buying and selling ruined great long-term potential. When you find a good business, the smartest action is often no action at all. In my time on Wall Street, I saw investors abandon solid positions at the first sign of trouble, only to regret it years later. They lacked conviction. Conviction isn't loud. Conviction doesn't require daily validation from the ticker tape. Conviction's having the stomach to let a process play out over years, ignoring the daily noise of commentators and crowds. When you have real conviction, doing nothing becomes the easiest decision in the world. Segment 2. Charlie Munger. Charlie Munger was famous for his radical discipline of waiting. He described his style as extreme patience combined with decisive action when the rare opportunity arrived. He was perfectly content sitting on large amounts of cash for years, watching opportunities pass by until the odds were heavily stacked in his favor. He did not feel pressured to play every hand. He understood that most human errors stem from the inability to endure boredom. Managing funds over 4 decades taught me that sitting on cash is one of the hardest emotional tests in existence. The world demands action. Peers demand action. Your own brain demands action to relieve the tension of waiting. But Munger demonstrated that sitting still while others scramble is a powerful competitive edge. Patience is not waiting around for something to happen. It is preparing yourself to execute only when it truly matters. Segment TS1. Warren Buffett. Warren Buffett built a lifetime of success on a simple principle: lethargy bordering on sloth. His public record shows that his greatest wealth was created not by hundreds of brilliant decisions, but by a handful of great ones, and then getting out of his own way for decades. He famously observed that the market is a device for transferring money from the active to the patient. His career is the ultimate demonstration of the power of compounding through long-term holding. Looking back over my 85 years, I realized that the most costly mistakes in life rarely come from missed opportunities. They come from impulsive actions taken out of fear, greed, or boredom. Buffett mastered the art of non-action. He proved that once you have chosen a wise path, your primary job is simply to avoid interrupting the natural flow of time. Mastery is not doing extraordinary things. Mastery is doing simple things and having the wisdom to leave them alone. Recap: John Bogle taught us that restraint protects us from unnecessary friction. Walter Schloss showed that simplicity clears away the noise. Lynch demonstrated that conviction allows good things to grow uninterrupted. Charlie Munger proved that extreme patience prepares us for the right moment. And Warren Buffett reminded us that ultimate mastery is the willingness to sit still. In a world obsessed with doing more, true wisdom lies in knowing when to do nothing at all.